And good evening, everybody. This is Michael Filighera. I am with LogicalSignals.com and TradersHelpingTraders.com. And this is the Elliott Wave update for the S&P 500 for Sunday, September 26th, 2021. As we left off on Thursdays for Friday's trade, I had been anticipating or suggesting that we still appeared to need additional upside that would eventually break back above Thursday's highs, and those were at 44.55. The market did rally nicely on Friday, pretty much right from the opening, but after Globex had taken us lower in a little tiny fourth wave. And then we're beginning to rally. So I still think we need that additional upside. And let me take this right now. And so in thinking that we still have additional upside, there are a couple of additional Fibonacci extensions that I want to start by, so we can start to hone in as to what areas are going to really maybe contain it. First thing I want to put up is just a retracement. So you're going to have to stick with it because this may get a little bit congested, but we're going to pinpoint where we think this wave 5 of C can come in. It's not good enough. Sorry about that. 50%. And so our first level, which is still open, we've now surpassed the 618, but not by a whole lot. We came down to the 4, and now we're back right there at it. So our next level on this larger Fibonacci retracement for the B wave, we have 44.74. Now I want to add what we can put in for Fibonacci extensions for wave C. And so the extension going to go from there to the top of A, to the bottom of B. And then we have some levels right in here. We have 44.61, then we have that 74, and we have 85 and 94. And because we know we want to get above here. So our first level would be 44, actually 62 for par. Now I'm going to add one more level. And that level is for this fifth wave. And that would be, we take from the bottom of wave 2 to the top of wave 3 to the bottom of wave 4. And we all get clustered right around the 70%, 70.5% retracement of the A wave comes in very clean. You have a little bit from 44.61 to 69 to 74 all the way up to 76. And that is a beautiful little zone that really kind of tells us this is a very high probability of containing the rally that could still be left over to come in before we actually top out and begin to drop in a C wave. So again, we're looking for, we're in C, 1, 2, 3, 4. So we're in 5 of C, which should complete it. And we run the possibility that yes, it ends in a little bit of a failure. That high is 44.55. The high from Friday afternoon was 44.53. So it came pretty close. And right now we've actually gone up back to that 54 level. And so we're even closer. So maybe the run will begin and they'll just keep going as the Asian markets open, et cetera. But once it is complete, then I'm going to be looking for confirmation on the hourly chart by a quick 5 waves down, and it wouldn't start to break below our moving averages. So now I'm going to dismantle this. So again, that's the zone, 44.61 to 63, I think sits in there. And then you have 69, 70 to 74, 75, up to 76. That is the zone I think contains the remainder of what's left in the rally. Then let me take these off. If it truly is, then what we are going to be confronting is a C wave down. So what do I need to put up there? I can start to measure that C wave. Well, where it would be was we will go back and we would use Fibonacci extensions, and we'd be running from the top where wave A started down to the bottom of wave A up to the where this B wave finally does top out. But I will tell you that we have that cluster right around 75. So let's just, for the sake of this exercise, consider that 75 completes it. So we can get kind of an estimation of what may become at 74. So yeah, right there. And then it takes it away. Don't you love it? What about computer? That's cooperate. That's there. And we can go up to level 74. Perfect. 74.50. And here is what we can start to project for a C wave. Down. Now, the most common relationship on a Fibonacci basis between a C wave and an A wave is that they're equal in length. And that comes in at 42.19. The second most common relationship between a C wave and an A wave is that the wave C is 1.618 times the length of wave A. And that comes in at 4,061. So we do have these additional points, but these are common. Also, what would be expected because of the structure is that wave C would take out the low of wave A, and that's at 4,293 or 4,294. So we needed to break below that before it to be complete. That is a general guideline, not necessarily a rule, but it's kind of an expectation. So wherever this tops, I'd be looking for it to turn and eventually break below that level. Now, is this what I'm looking for tomorrow? Obviously not. Become midweek, who knows? The market will tell us. So, but ultimately, I'd be looking for it somewhere down below where we get the new lows. 42.73 is a new low. 42.19, obviously, a new low and a fib level. So that's how that all comes into play. So again, for tomorrow, we're going to be playing the upside. And hopefully all the good rallies don't happen overnight and that it completes. If that's the case, then we just have to change our thinking. We have to change where we expect the larger moves. Now, US opening, I would imagine it'll probably come into the upside. But again, it really will, we have to wait and see. But we will be able to determine quickly which particular side we're likely going to see the greater follow through on. And if this has topped out and we're looking for the start of a C wave down, then I'm going to start to try to find, or not find, but I'd be looking for the bars to give me the indication that the market has turned to more aggressive selling than it has to aggressive buying. And then that's what we'll notice through the bars. And you'll notice them on your smaller time frames. So, wow. Right now, that's not really in play. You can see here. This is kind of what I'm talking about. These kind of bars. And this came on Friday morning, right from the open. Boom. That's just a huge bullish bar. Had two more, and then it was followed by a bearish bar, which that was got engulfed immediately. So the opening very definitively was to the upside, at least for the first half hour. But that had that big bar in, which was nothing more than just, somebody running their sell program that they needed to get in there. Both were tradable. It all was tradable. Again, this is a 5-minute, but that's what I'd be looking for confirmation to the downside. This was a good start, but it was basically into the close. And it was expiration. So boom, they're not going to go battle this thing. It just stays. But now we're seeing that buyers step back in. In any case, sorry I ramble on. It's a Sunday. It's been a long week. That's where I'm going to leave it for right now. And the next update will be on Monday, the 27th.